What's happening, traders, and welcome back to Shifty FX. What I'm going to break down for you today is DXY and following that two pairs, Euro USD and GBP USD. In future, if you want me to look at anything else, throw it in the comments and I'll do so. But for now, I'm reviewing and analyzing the trades or the pairs that I actually trade off of. So what we see, market is respecting the consequent encroachment of this monthly fair value gap. We then have market creating bullish fair value gaps and disrespecting the bearish order flow. Okay, so we see this bearish fair value gap inverted, broken above, and we've left a breakaway gap to the downside. Two, in fact. We've then seen the previous month's high taken already, giving a good indication that the market is significantly bullish at the moment. Would I like to see market trail all the way down to take this low, tap into these? Absolutely not. I want to see this bullish run continue to the most obvious swing that we have right now for long-term drawn liquidity. But for now, I would like to see a bit more of a retracement this month. So taking the high, retracing back a little bit, keeping this as our protected low for now, and then continuing up. Or if we get a strong bearish close, I would look for market to continue down into these levels. We have an overlapping order block over there as well on the monthly. So market could find confluence in these, tapping into these areas and continuing to the upside. If we move to the weekly, you'll see weekly order flow being respected, giving a good indication that the bulls are in control. Again, consequent encroachment, not getting closed below. And we have great overlapping confluences here. So we have a weekly fair value gap and we have an order block. Okay. So what am I looking for market to do this week? If I highlight two key areas, now again, this isn't saying that the market will draw down to the downside. I have a confirmed swing over here. I have an unconfirmed swing to the upside. If we get a bearish candle close, I'd look for market to trade back into discount, which again adds great confluence to the EQ over here. Okay, that's really nice. So that's a solid order block because it's respected previous bullish order flow and moved away, breaking structure to the upside. Right there. And we could see market pull back and respect these levels. We have some good sell side liquidity in last week and the week before's weekly candle close lows. Market could draw towards that. If we go to the daily, what am I looking for here? Okay, let's tidy this up a little bit. Okay, all right, so if market is going to draw down, given that these are so close, I'd like to see that distinct swing taken over there, tapping into this level and into that order block, continuing to the upside. I think it's going to be extremely important seeing what market does over here for Monday. I wouldn't be looking at jumping into the market just yet. There's one of two scenarios. We're going to see this inverted, drawing to the downside. This is pretty much cements this level over here for me. Clear sweep, mitigating a level and continuing to the upside, breaking structure. So this is definitely my protected low. Yeah, market push down, disrespect this level, tap into this fair value gap and continue taking the previous day's high. If, for instance, we see market trade lower come Monday, close bullish, I'll look for it to target my immediate swing drawn liquidity. Okay. That being said, let's have a look at EU. But again, guys, important to see what the market is going to do on Monday. I think we could have a early morning previous day's low taken, given it's an inside bar with a bullish fair value gap, daily fair value gap right there. And I would like to see how Monday is going to close out of this. If we get that reaction, like I said, draw to the upside. If it stagnates and closes down below, look to ride that momentum down, targeting the sell side liquidity, this weekly fair value gap and order block. Okay, let's have a look at EU. So dropping onto the monthly. Clean sweep of liquidity. We're respecting this monthly fair value gap now. Tapped into the consequent encroachment, reacted, pulled back down, tapped, pretty much a reaction candle. We do have a monthly fair value gap over there. And we see that overlapping with this monthly order block. Excuse me. All right, brilliant. So what makes it a strong order block is its swept liquidity. Right there. Markets moved away, displaced to the downside, displacement, fair value gaps equals displacement, pushes to the downside, inverted levels, leaving this order block breaking structure. Okay, so that's a high probability order block right there. Why I've drawn on the wick is because it has an overlapping fair value gap. If I don't have the overlapping fair value gap with the order block, I use the body. Okay, monthly low taken, reacting aggressively now. If we go to the weekly's pushed off of there, but still closed below that swing. So my immediate draw, I would have to say, is that low? Give me a sec. Yeah, close below the 50% of that. All right. It's not a convincing candle close, but what we could see happen is market could still draw to this, respect it, and give a bit of a bounce, targeting this monthly. Okay, we have a nice swing right there. And apart from that, there's not a lot going over here. We've respected this weekly fair value gap over here. Again, body's respecting it and continuing to the downside. If we have a look at the daily, sweep of liquidity, impulse move to the downside, creating fair value gaps. And we've seen Friday close with an inside bar. Okay, so again, I'm going to map this one out now, just given that we want to see what Monday has to offer. If we see strong momentum on Monday, come up aggressively, close above there, my next drawn liquidity would have to be this high. Okay, from that point, this is all pretty low resistance liquidity. Did that respect the 50%? I think it has. Yeah, respected the 50% of that. That would be my next draw. And could see a rally to the upside. If we see this react on Monday, giving a good reaction candle, like I keep on talking about to you guys, if we use our 2 candle theory, you want to see Monday trade in like this, for instance, give a good reaction out, and then we understand that our immediate draw would be the previous week's low. Okay, looking to ride that momentum to the downside. Market opens up on Tuesday. We look for our bias. We understand our bias is respecting bearish order flow, and our narrative is how we essentially want to get into the trade. Are we going to use the power of 3? Are we going to use delayed or normal protractions? And what is our external range liquidity right here? So internal to external. If this internal is violated, where's our next external or internal range? Nothing over here. We would look for that to get taken. Okay, essential to let the market play out so we can see what's happening. GU, pretty much the same thing, guys. I don't have to go over this too much. You can see here we have an obvious swing to the downside right there. Previous month's low taken already. Weekly strong weekly close respecting bearish order flow again on GU. So good reaction out of there. Very nice. Strong order block. Again, there we go. Draw it on the body because it doesn't overlap with a fair value gap over there. So bearish order block. This should be my protected swing high for now. So weekly, this would be my immediate draw on liquidity. Using the 2 candle theory. Strong close below the previous and that swing. I want to see how market can draw to that. If I get onto the daily. Yeah. Daily fair value gap. And again, just letting market play out. Okay, so we're going to sell on our hands, guys. Couple of scenarios. If we see market, like I said, reiterating the same stuff. If we see market open, take that high and give a good close below. I don't have to be the first in the market trying to trade this previous day's high in there. I would like to wait and confirm a close down. Look for market to pull back on Tuesday and then ride it lower to the downside. But if we see an aggressive move up into this area, I'll look for that. Market maybe pull back again, given Tuesday, target Monday's high in there. And then even at that point, we could see a rally to the downside. It all depends on what Monday's going to do, okay? And how we trade our 2 candle theory essentially is just looking for your lowest hanging fruit, your previous day's high and low. Right now, we can see, without a question of a doubt, market is bullish on DXY, bearish on GU and EU. We have order blocks being respected. We have fair value gaps being respected. The order flow is down. So our bias is down. Narrative right now, we need to see what market intends to do. So we have a confirmed swing low here. We have a lower high on each side. High low, excuse me, on each side of this candle. So confirmed swing low over there. We could see market rally up, push up into the consequence encroachment and the EQ of the premium and discount, and then rally to the downside. But vitally important that we wait and we see what Monday has to offer. All right, traders, have a solid week and we'll catch you soon. Cheers.